Good morning, traders. Paul here with GammaEdge. Today is Thursday, the 20th of April. Let's get started. Pause your players here. Read to the very bottom. Important to you, important to us. If you agree to all of this, hit your play button. Summary for today. Short-term market model. We are in a weak uptrend from a 0 DTE and a swing perspective. The CT closed slightly up. This is the cumulative tick. We are in a weak bull situation day over day. Something we call the railroad track pattern. It whipsawed again yesterday. It's back to long, but it's very weak. So just be cautious. Watch for reversals, whipsaws. We saw them yesterday. We're probably going to see them again today. We'll see what happens. Longer term, the market model is bearish. The ribbons remain inverted, but we are improving. So the ARCX, which is the NYSE, the NASDAQ, and the AMEX, is above the ribbon. You'll see this here shortly. It's in a longer-term bullish condition. We call this the quality tick. The USC, which is the US composite, confirmed down on 3.7 or 3.8. It's not participating. It's horizontal. Broadly speaking, the market is not firing on all cylinders. The TIKRC, which is the S&P 500, and you can use the SPY or the SPX to get a very good correlation. Moved above its ribbon, and this is good. This is improving. It may be too little too late. We'll see. We've got some storm clouds that are approaching that are not just on the horizon, but they're fairly imminent. TIKRC, which is the NASDAQ, strong CT price divergence yesterday. Want everyone to be aware of this. We had price moving up, but we had selling as price moved up. Be aware of that. And then the RLC, which is the Russell 2000, it's crossed into the ribbon. It's bullish, but again, might be too little too late. Market breadth, which we use the 52-week new high, new low, much like John Boyd and others, had new lows still outpacing new highs. Market breadth sucks. There's no other way to describe it. 184 down to 139 up. We still consider this bearish overall. Until we get all the stocks making new 52-week highs, it's going to be very, very hard to call this a powerful bull. The combo structure has a notable change today. Minus GEX has moved up to 4,000 from 3,800. Plus GEX has dropped to 4,150 from 4,200. This is SPX. This is very significant. This sets up a contention in both directions. We do have a market after all. The 0 DT, folks, pay attention to several areas today. The 4150 may remain where we are as a pinning strike. Watch the value in SPXP in the Discord to see the areas that are being targeted. OTM calls being targeted when you watch that. Above 4150 towards the 4200 strike will pull us upward. We do see a neutral area as we go through 4175 because we'll have the same strength below us as well as the same strength above us. Just be aware of that. 4130 is what we would consider the bullish line in the sand to the downside. We have to remain above 4130. If we don't, and we lose the bottom of the transition at 4125, the bulls will be in trouble, we think, and the bears will be triggered to really start pushing downward. As I said, the market model via the cumulative tick, we're above the ribbons. We're in a weak bull. We had this whipsaw behavior yesterday. If you don't understand what you're looking at here, come on into the Discord, and we're happy to explain it to you. Trying to keep the presentation here this morning fairly short. This is not predictive. We don't know the direction. We think there is a bias to the downside, and we are cautious that we're getting very close to the top of the ribbon. We'd like to see that come in, no question, and you can tell by the slope change as this comes in, this starts to flatten out. We get closer and closer to failing and potentially moving down, and that will shift us from having a long delta stance to a short delta stance. So just be aware of that. Taking a look at Gamma on the ES, flat as a pancake, no changes. Pause your players here and you can look at that. VIX is at the bottom, a little bit elevated from where we closed yesterday, but across the board, futures are indicated flat with respect to the Gamma levels. Taking a look at Strategy Watch, these are more or less trend entries. We are looking at these. These are fast movers, typically 0 DTE. maybe up to a week long at most. The trans to plus GEX are generally multi-day swings. Watching these two, and GEX ratio, long entry, XRT if retail starts to get going, same thing with real estate, FSR. Everything here has been beaten down and may continue to be beaten down. So I would be very cautious on all of these, especially if the market looks to pull back. Let's take a look at the Gamma. This is the PM settled complex for today. Looking out over the horizon, this is everything turned on. We continue to see a weaker Gamma in the SPX complex. This is due in part to expiries, just natural, calls coming off, puts coming off, etc. We've been more call dominated, so it would make sense that as we expire, those would come off. We're also starting to see, though, the addition of short-dated puts into the complex, and that's driving in part some of the net positive number down. Want to pay attention to this 41.25, 41.40 level. This is a reoccurring theme. It's been here all week, and it will continue through tomorrow. It's important because if we lose this transition range, it does start opening the door to the downside. Want to call out this 4,000 strike in the PM complex. We've had a significant growth in the puts that are down here. Which is triggered now. This was up here at the JPM strike up here at 43.20. It is now down at 4,000. What that means is that we've had a number of folks who are now catching blood in the water and are now starting to position for a downside move. A highlight here at the 40.45. Yesterday, this was a negative delta. It's slightly positive. 51 million is not a big number in the SPX complex. This could easily flip south again, so just be aware of that. And then we're starting to see a little more red start to creep in, which means the out-of-the-money put speculators are now starting to appear and erode way far out. We got a long way to go down, but they're starting to erode the sand under our toes, so just be aware of that. 0 DTE, realistically, the upside contributions from today, 41.85, 41.90, that would be our maximum. We're not really seeing that. We're going to target the 41.75 level, and 41.30 is really the operating range for today. A drop below either of these intraday isn't so much as important as a end of day close above or below. A close, or as we go into the close, a close above 41.75 will empower us to go up to 4,200, but really no higher. 42.05, okay. A close below 41.30 because that line in the sand comment earlier starts opening the door to something south. Looking at tomorrow the AM expiries for the monthlies trigger at the open. So today is the last trading day for the AMs. Also, tomorrow's PMs are present. And one thing that, and I boxed this in as a red box, this is a significant amount of contracts that are coming off today and tomorrow, indicated tomorrow here. Why this is important is there is a large percentage of in-the-money calls that are coming off. Unless these get replaced, rolled out and down to like in kind, so like in calls, kind in strike, you're going to see a shift of the sands underneath our feet. 41.30, 41.35 is one potential overnight pinning for tonight, so I watch this as we go into the close tonight. And then I'd also be mindful of this 41.60, 41.65 area. We've got a node that's developing there. Again, we do not anticipate between today and tomorrow a break above the 41.95, 4200. It'll be a real stretch to get to 42.05 unless we see targeting intraday, and again, use the value command within the Discord to keep track of that. Taking a look at the crystal ball for the balance of the week, this includes today and tomorrow. This is the SPX Combo Complex. So we've seen nearly a 50% reduction in the net gamma in the complex. This is due to two things: calls coming out or puts going into the complex. Be aware of that. Short dated, and this is why put call ratio is not a good indication, but gamma is a good indication. It tells you how positioning with respect to time is working. We've also noted that we've got a very, very tight range, 41.30, 41.35 between today and tomorrow. Pay attention to that. If we lose that 41.30 strike, things open up, and it could push us downward towards this 4,100. Again, that same red box below us, these are in the money calls, and I'll also put a red box up here that goes up to that 4,195. These are calls, out of the money calls, that are expiring from the complex between today and tomorrow. Significant in that when you lose your overhead out of the money calls, that empowers the in the money puts to start coming through, further becoming resistance in the overhead. Unless we get speculators to step up and start targeting calls up here, it ain't going to happen, folks. That's just the way it's going to be. The combo complex, which is the mothership, 18 million contracts, still very much in control on the out of the money call side. That's the green deltas you see here, all the way up to the JPM strike at 32.20 or 42.20, excuse me. Below us, we've got the in-the-money calls still dominating the conversation, but in both instances, they're weaker, right? And we're seeing the net gamma weaken within the mothership complex, right? Within the combo complex. So just be aware of that. Also want to call out the relative magnitudes of the 4150 because this has dropped down from the 4200 strike in the combo complex. This is not normal. We don't normally see shifts in the combo complex just because the liquidity there is huge compared to everything else. We've also seen an advance upward of the 4,000 from 3,800 to 4,000 of the minus GEX strike. So people are positioning closer to take advantage of a drop in price, but also people are positioning at the 4150 at the money to take advantage of an in-the-money push to the north. So be aware of the contention that is setting up and the relative magnitudes between the 4150 and the 4200. They're very close. And as we move up, depending on how we're targeting, this will become a neutral area. The 4175 could become kind of that balance point when you look at charm flows being above a dominant strike down here and above or below a dominant strike here. So above the 4150, below the 4200, there is a neutral area that would develop between these in context of charm flows, in the money, out of the moneyness. If you don't understand that or can't visualize that, come on into the Discord and we're happy to walk you through some of that. It's very easy to see kind of the landscape of what we're looking at. So this 4150, 4200, very, very tight, very much in play, and we could bounce back and forth depending on 0 DTE and 1 DTE targeting today and tomorrow. We could get a regrowth of the 4200 if we get in any empowerment to go to the upside. By the same token, we could get a monetization, which could push us down, and if it pushes us down too much, the 4130, 4125 line in the sand at the transition zone, incredibly important, incredibly narrow and tight. We could break either way, right? That's what this is telling us. 4100 and then 4000 are both in the same contention also. So again, if we get puts that are starting to dominate, short-dated puts that dominate here at 4100, that could take the battle, and that will have an influence to the downside. If we continue to see the growth of the 4000 strike, which is a Livermore number, etc., that could empower the folks for a longer-term directionality pull to the downside. So that's it for today. If you have any questions or comments, come on in to GammaEdge.us. Click on that webpage, upper right-hand corner, pricing tab, fill out the blanks, come on in, 14-day free trial, all the tools turned on. Follow us on Twitter, please, and here on YouTube. If you like today's commentary, let us know by thumbs up, smash that like button, and subscribe, because Taylor and I are posting videos and we want you to see what we see. We release these videos to members before the open. We post them in YouTube midday. People pay for this. We want them to have the benefit of seeing what we see right as we see it. So thanks, everyone. Make it a great Thursday, and hope to see you in the Discord. Thank you.